The major US stock indexes closed the first trading week of 2022 in the red. High-tech stocks incurred the most losses. The Nasdaq slumped nearly 800 points since the beginning of the year, from 15,730 to 14,930. All in all, the index has shed almost 5%. The Dow Jones closed the week with a 0.1% downtick, and the S&P500 lost 0.4% last week. Experts pinpoint that new fears behind this market fall. Investors are revised their portfolios, pricing in the coming rate hike by the US Fed. Besides, a large downward correction was just a question of time. Last but not least, the Omicron outbreak around the world has made its impact on market sentiment. Nevertheless, the stock market has not exhausted its bullish momentum yet. On Monday morning, futures on the S&P 500 again inched up by 0.1%. Yields of 10-year Treasuries also climbed to 1.76%, to the highest level since the spring of 2020. On Friday, the U.S. Labor Department released the employment report for December. According to the nonfarm payrolls, the U.S. economy added just 199,000 jobs, almost twice smaller than expected. On the plus side, the jobless rate declined to 3.9%, below 4% in the previous months. This is a comfortable level for the Federal Reserve to begin raising interest rates. The first rate hike could be announced in March, or at least in the middle of the year. The euro asserted strength against the US dollar on Friday. In turn, its index fell sharply. However, the euro-dollar pair and the US dollar index have not escaped from the borders of the trading ranges. Today, we see that the index is still moving inside the same corridor between 95.60 and 96.20. Currently, it's holding at nearly 95.90. Fed Chairman Jerome Powell is due to speak on Tuesday. The economic calendar reminds us about important economic data to be released later in this week. Data on consumer and factory inflation, the manufacturing sector, and retail sales. So, these important reports are likely to set the US dollar in motion. The USD CAD pair had eventually to give in to the oil prices. The steady uptrend in the oil market pushed the USD CAD pair down to the lower border of the range between 1.2580 and 1.2700. Meanwhile, the currency pair is trading at about 1.2650. Our experts do not rule out a breakout of the pair below the level of 1.2600. Last week, Bitcoin came under strong selling pressure. The flagship cryptocurrency was hurt by the minutes of the Fed's policy meeting and the political unrest in Kazakhstan. Nationwide anti-government protests forced the authorities to impose a curfew and cut off the internet. Importantly, after Beijing had banned crypto mining inside the country, a lot of mining farms relocated to Kazakhstan. This country is the second largest hub in the world in Bitcoin mining. The digital token lost 12.82% last week, having tested support of $41,000. Today, the crypto is poised to regain its footing, now trading at about $41,162. To sum up, the US stock market seems to be ready for the second bearish wave. As the correction is still at the early stage, there is a 50-50 chance that the market could rebound. Analysts assume that the indexes could make an attempt to resume growth. Market sentiment will depend on the inflation report, which is due on Wednesday, January 12. The US CPI surged to almost 7% in November in annual terms, whereas the core CPI jumped to 5%. The soaring inflation is the underlying reason why the Fed Reserve has to increase interest rates. Besides, some political events might influence US stocks. The talks on security between the US and Russia, as well as between NATO and Russia, are to kick off in Europe. Moscow insisted on the talks, demanding that NATO withdraw its troops from East Europe to the extent of 1997. The negotiations will hardly be a success. And that's all for today. We wish you profitable deals. See you on our next release tomorrow.